Camera.
Hi, everyone. This is Mary Jane from Freedom Financial Solutions here with Cass Smith. We are doing it is the 22nd of October 2025, and this is a pre-group Q&A. I'm just going to mute everybody. How it works is if you've got any questions that you have, feel free to ask them. If you want to ask them using your voice, you can do that. You can also put them in the chat. Sometimes people have problems with their speakers. If someone's already asking a question and you want to be next in line, you can simply raise your hand. There's a little hand icon. You can do it that way. Cass, I'm glad you made it. We've been busy. Oh, you have to unmute yourself, Cass. Sorry, there was a bit of feedback. I went through and muted everyone.
Yes, I was busy trying to get a presentation ready for another presentation tonight that I'm also going to talk to you all about here today too. And of course, I'm in Queensland and I thought the presentation was 12:30. Well, 12:30 my time, and then luckily I checked my calendar and went, oh my God, it's right now. I will have a bit of a presentation for you all a little bit later, but it's really rushed. It's not complete yet because I thought I had another hour, but that's good. This can be a trial run ready for the one tonight. So yeah, Mary Jane and I were in Fiji for a week learning wonderful strategies, one of which I'm very excited about, and it takes a lot to get me excited these days, so it must be good. But we'll talk about that a little bit later, because what we really normally do on these sessions is no presentation. We just absolutely open up to questions, any questions anyone's got. So we'll start with that, and then I'll get onto the presentation a little bit later after we've dealt with a few questions. So who would like to go first?
Eliza's got her hand up. Quick sticks. Eliza, over to you.
Hello. I'm just wondering, I've got the metals with Ainsley. Can I literally take profit at the moment? It's, not just store of value, understanding that, or take any out and take it back to my Macquarie self-managed super fund account and then manage my own crypto self-managed super fund stuff? And is that an accounting difference, if they're not doing it?
Yep. So just let me check. So the metals you've already got there in your SMSF?
Yep.
Yeah, absolutely. No problem selling them. The money does go back to your Macquarie account. That's where it legally has to go. And then if you want to move it to a crypto account, that's absolutely fine as well.
So do I need a special crypto account, or just get my own, buy it and stick it in a hard wallet, wallet?
It will be in the name of the SMSF. So that's the only little complication there, whichever crypto exchange you're dealing with. We, by the way, recommend Ainsley Bullion for crypto. But if you're using your own, that's fair enough too. You just need to make sure that they set up the name in the account of the account in the name of the SMSF.
So start up a new account.
Yeah.
There's two things, if I can just comment on this. And the reason is that we had a client recently who just wanted to change the sizes of her metals. So she had some big gold and she wanted to make them in smaller amounts. So anytime you sell an asset in the SMSF, there will be a potential capital gains event if it's gone up. So you do just have to be aware that when you sell it, that will be part of the accounting. So just be aware of that. And the other thing I wanted to mention was that unfortunately since November last year, Macquarie has not allowed money transfers from any account, including SMSFs, out to crypto, a range of BSBs that are connected to crypto trading platforms. So what you will probably find you have to do is find a crypto-friendly bank, and we don't have one, sorry. You just have to Google crypto-friendly bank that I like, and set up another bank account in the name of your SMSF, then transfer whatever the amount you want to dabble in crypto. Let's say it's $10,000, just as an example. Transfer that into that crypto-friendly SMSF bank account and then make the payment from there.
Okay. So with Ainsley, they are an exchange for it. They don't manage it. Is that right? You said you recommend Ainsley. Is that as an exchange?
No, I think I would have to be, you'd have to ask them directly, but I'm pretty sure they just manage it. They are probably using an exchange. But what I like about them managing it is that I don't trust myself with not losing those 10 words and all that other crazy complicated stuff. So I just gave my money direct to Ainsley and they did all my crypto for me, which they can do for anyone.
Yeah, I'll find out their fees. Thanks.
All right. So Bree, you have your hand up. You have to unmute yourself.
Okay, can you hear me?
Yes.
How you going? How you going? I'm wanting to know. I'm looking at. I don't want to say too much in case somebody steals my idea and runs with it. I'm wanting to set up a not-for-profit kind of thing, which I'm just asking about the best way to structure it to be able to limit my obligations as far as the people running it, and also be able to be like a charity and to get government grants, and if I'd get donations to be able to, for them to be tax deductible to the people who donate, but as well as being able to get an income to pay staff, and most of the money go back into the venture, but as a side thing, yeah, I'm not sure. Somebody's mentioned limited by guarantee, registered with ASIC. Other people have said incorporated. I don't know what the best way to go about it is.
Yeah, so charities and non-profits are a very specialist area that we don't do. And we have set up our own charity, which we'll be launching next year, and it costs $15,000 to set it up.
Yeah,
done right. So if you're interested in that, I can definitely introduce you to the people that do it for us.
Yeah, absolutely. I need to get this moving, because it's all in the everything's in the media and everything at the moment right now about it, and I need to jump on it. It's been a little bit in the planning, but I wasn't expecting it to be in the media right now. So now's the perfect time to jump on it, and I can't grab an ABN or anything without knowing the structure, which way to go. So
yeah, and it does cost. It does not only the cost. It took us about 12 months.
Yeah.
Get it set up. So I mean that might be something worthwhile. You're having a just a one-on-one session with me where we can talk about maybe just setting you up a proprietary limited company and getting you an ABN, just so you can at least get started.
Well, that was going to be my next question. So, let's say obviously you can't change things once you've set it up. You can't change it down the track, but can you sort of add subsidiaries onto it, or
Yeah, you'll be able to change things, but potentially transfer things over, move things. You know, just because you've set up a business or a company doesn't mean you're stuck with that forever. You can change it. So yeah, it might be worth, you're seeing me, we're setting up a normal type of company just to get going, and then work on with this other firm with the charity, and then change over the charity once you finally get that through.
Okay, all right, that sounds good.
Sounds
good. So I can just go into your calendar and make an appointment for that. Yep. Cool.
So when you're booking with Cass, that will need to be. It's under the trusts, business setup, and advanced accounting. I'm just having a quick look now. If that's
I think it's 220. I think it is.
Yeah, trust, business setup, and advanced tax, or advanced something or other. Advanced tax advice. And I would strongly recommend emailing Cass before the appointment with as much information as you can, just to make the most out of the time.
Yep, sure. I did send through some basic information when I made this appointment today, just to see if you wanted to get a heads up on it. But that's cool. I can do that. No worries.
Okay, sorry. Since we've come back, I've had not 1 second to breathe. We've had wall-to-wall appointments, so unfortunately, I haven't looked at your bookings for today.
That's all right.
So
no dramas.
All
and
right.
Cass, that hair color suits you so much.
This is my natural color.
It looks great.
Like, I mean, I do use a wash that makes it a little bit grayer, but no, my whole life I wanted to be grey so I would look intelligent. Now I am naturally grey, so hopefully
it actually really suits you, that colour.
Hopefully it makes me really intelligent.
Lisa, I think you've got your hands up now. And for those people who just joined, just to let you know, this is being recorded and we will put it on our YouTube channel. That's why everyone's got their faces off. but you can ask your question by simply putting up your hand. So it was, who did I say? Lisa.
Hi, thank you so much. Sorry, I've just joined. My husband's in hospital at the moment, and I just didn't want to miss this. The question I had was clear in my mind, and I'm just trying to remember it. We have a super fund with you. We've been with you for a while now, and I wanted to know if I wanted to buy a house that we want to live in, because currently the house that we've got, we're not going to build. It's too much of a problem. If I sell that house and I sell an investment property, should I put the funds of the sale of that property into my fund, into my SMSF, and then use that money to purchase a home? I'm just trying to figure out the best way.
No, because the number one rule about property in an SMSF is that you can't live in the property.
Oh, so even after my husband hit 60?
No, still can't.
Okay. So I'm just trying to figure out the best way I can use my gold. I have a fund that we had invested 251,000, not in an SMSF, that's grown. And then we have our SMSF. So don't use the SMSF to buy property.
Not your own property.
Is it better than I think it's better than to just borrow money rather than take out what's in as gold at the moment?
How old are you?
I am 57 and my husband's 60.
Yeah, okay. Is your husband still working?
Well, he's got cancer now and he's just recently stopped working, and we might get some income protection for a while. I don't think he'll be going back.
Okay. So on that basis, your husband would be able to withdraw his super if you wanted to. And then I think your other question was whether you should sell up the gold and silver to use that, the gold and silver that's in your own name, to use that to buy the house, or borrow. That's an entire crystal ball type scenario question, because if gold
what, sorry, scenario question?
Crystal ball.
Oh, crystal ball, sorry, yep.
Because if gold and silver are going to continue to escalate the way they are, then yeah, you would be better off borrowing.
Yeah,
I
thought
gold and silver where it is, and then later on selling the gold and silver to pay off your loan. What the risk you are running there is if gold and silver, all the gains that they've recently got, that retracted and the gold and silver market crashed. I really don't think that's going to happen, but I can't recommend that you hold on to the gold and silver just in case. In sort of situations like that, some way it's all what I call the sleep at night test. So what would you be comfortable with? What would you be able to sleep at night with? If you are happy to do the borrowing and you can sleep at night knowing you can make those repayments, great. Or is it a matter of maybe sell half the gold and silver, get half the gains and borrow a little bit less? It's what you'd be comfortable with.
Right. Okay. So you'd still have to, can I ask you, maybe it's a stupid question, maybe it's a question you can't answer, but the money that we have the amount of gold and silver we have in the deposit box at the gold place where we've bought it from, GBA, if we sell that, we have to pay capital gains tax, right?
Correct.
Okay. I don't know if I should ask this question, but if we sell it and don't pay the capital gains tax, how will they know?
Oh, they won't.
Okay. Unless there's an audit that's done.
So, yeah, I can talk a little bit, and I have to be very careful about what I say here, so you need to read a bit between the lines.
Yes.
To my knowledge, they don't have any data matching between gold and silver dealers and the tax office. So they do for things like crypto, share market, property market, where if you sell a property or sell crypto, it goes on your tax portal to say you've sold it. So they know about it. With the gold and silver, they don't have that yet. This tax office may certainly in the future decide they're going to go back and do a data matching. they would have to go to all of the gold and silver dealers, and there's a lot of them. They would have to somehow get all their records and then translate that into electronic records and then do a data matching. It would be a really big project. I don't think they've got the resources to do that.
Right.
Then even if they did, I know the way the tax office works, they would start at the biggest transactions, you know, the $1 million sales, the $500,000 sales, the 300,000, you know, they would look at them before they would ever get down to small sales. So my estimation, if you, I'm not saying you shouldn't return the gain, because that would be illegal for me to say, and I'm a tax agent and I can't say anything illegal. If you just forgot that you sold the gold and silver, just like, what, you had a brain fart when you did your tax return, and you forgot, very, very unlikely chance they will track you down. And if they do,
it's just a general question, because you know, you just don't know. So I just sort of put it out there.
And it's a great question, Lisa, because I've got to say, most people, including myself, would not actually know about needing to report a capital gains for gold and silver. Like, in most normal people's minds, gold and silver is just like money. Like, it's houses, we understand. Houses is a thing. So I would assume, and I'm not saying that people are doing it deliberately, I reckon there's heaps of people that aren't doing it just because simply they don't know.
Yeah, they've forgotten, and it hasn't been on the tax office radar forever. But now with the 100% gains on gold and silver, maybe it will be something that goes on their radar. But I haven't heard anything about it happening so far. So yes, you are meant to return it. And that's okay. That's
good to know. Last, I saw a video, one of the past podcasts, and Mary Jane, you had talked about the Sabre account maybe it was Cass that spoke about the Sabre account in Ainsley. Now I'm obviously with Macquarie Bank when they put my money in from work, but could I use the Sabre account for something like that, for our workplace to put the money in?
It's not for SMSFs, I believe, Mary Jane.
So I'm a little bit unclear. You're saying you want your work to use it as a...
No, I think she means just the guarantee amount.
Employer contributions. It'd first have to go into your SMSF, and then when Ainsley does it for entities, including SMSFs, then potentially you could use it. But at the moment, it's just only available for individuals.
Okay, is that something good for my daughter, for example, who's 22, to start using and start putting small amounts in and things like that?
Yeah, absolutely.
Okay, I'm sorry I took up so much of your time. Thank you very much for answering all the questions.
Okay.
All right. We've got Annabelle and Paul, followed by Paul. So Annabelle, over to you.
Hi, how's it going? I just wanted to ask, because I'm actually brand spanking new to this and don't actually have SMSF yet, and there's so many questions that I have. I just wondered, is this the best place for me, or should I book that? I think there's like a one-on-one option.
If you
with you, Mary Jane?
Lisa, if you put your email if you want to put your email into the chat, Mary Jane can send you an introductory email which has a whole lot of links, or email Mary Jane direct, and she'll reply with a whole lot of links, videos, frequently asked questions, a whole mountain of information you can read. And then, book in with Mary Jane to chat about it if you still have questions after all of that.
Annabelle, is that?
Sorry, Lisa. I think Lisa, are you still talking to us? You're on mute.
I think she might be talking to her husband. It seems like they're...
I think it was Sally's. Sally's next.
You were talking to me, were you?
Oh, sorry. I thought you were talking to me. That's fine. That's all good.
Sally, over to you.
Okay. Hi, ladies. I can actually recommend the frequently asked questions for a lot of answers. I've just gone through the process. I'm in the final stages, and the videos that both Kaz and Mary Jane have done, plus the frequently asked questions, have made the process incredibly good. And I actually, for my mushy carer's brain, it's actually been fantastic to go through such a complicated thing. So thanks for that, ladies. It's been great. And from that, Kaz, one of your videos I was watching, you're talking about managing actually drawing a pension and so on, which is necessary. And how does that work? Obviously, when you've got an account set up, say you've got your bullion in Ainsley or whatever, and you do a sale of your bullion to draw and your pension that goes through your Macquarie. How does it work when you're storing privately? How do you keep records of drawing a pension in that capacity?
So when you're storing privately with SMSF gold and silver, you're probably there already. You have to take a photo of it every year for the audit to make sure you've still got it.
Yeah.
If you do a sale, it has to go through the books and the bank accounts. So you would simply pick up your gold and silver from your vault, take it to the dealer, and then they put the money into your SMSF and you draw your pension from there.
Okay. So for those people that are doing that privately, do they find that more clunky? Is it more difficult?
Yeah, definitely it is. So you may have heard us talk about Ainsley Bullion's unallocated and allocated silver accounts. So I certainly have some of mine stored in those accounts because then even yesterday I just emailed Ainsley Bullion and said, I'm out of money. Please sell up 20,000 and deposit it to my bank account. And within 24 hours, there's the money.
Okay. So you can split it up then. So you could have some in either allocated or unallocated in Ainsley Bullion, and you'd have some stored at home if you wanted to as well.
Yeah, exactly.
Okay, great. That's really good. And just a part of that, with the non-compliance, I guess the way we're heading, this is crystal ball stuff, but do you see them making it difficult for SMSFs by heading down the path of a non-compliant issue being potentially digital ID?
If you don't have the digital ID, you might be non-compliant. Yeah, they could go down that path because the director's ID was probably the testing ground. Anyone that's got a trustee company needs a director's ID. They could then turn around and go, well, then you need the digital ID. I still wouldn't expect that for quite a few years yet.
Yeah.
So, and I guess we'll worry about that when the time comes. Obviously, we'll all do everything we can to object and protect and everything in the first instance, and hopefully that won't happen because it's all, as we all know, but I won't go down a rabbit hole, but it's they can't control our money just because we don't get a bloody ID number from them. But
yeah, that's right. Yeah, that's fine. Okay, then. And so basically, if we're drawing down that pension and using our money wisely anyway, we're sort of staving off that happening inevitably, and then we can be learning how to manage things as we go along. So
yeah, I'm definitely I'm only joking when I say this on a video. I'm absolutely only joking. But if you've got gold and silver buried somewhere and they bring down those regulations, I'm only joking, but you could just tell them to go stuff themselves and you're not going to comply with anything and you're just going to run away with it. Oh, I'm only joking though. Only joking.
Yeah, I know, but I had that sort of joke in the back of my mind as well. So thanks. Thanks, ladies. Much appreciated.
Okay, so Paul, you are next.
Hey guys, can you hear me?
Yeah.
How you going?
Thanks.
Hey, just regards to that last caller, Lisa, when she was talking about whether the government knows you're paying your capital gains if you've sold some of your bullion, wouldn't they know, like within the 12 months when you do your next tax return, that you can't provide them a photo of all of the bullion you've got, so they'd be questioning where it's gone? Yeah,
definitely in an SMSF, Paul. Lisa actually had some medals in her own personal name.
Oh.
But in an SMSF, definitely you have to take the audit every year and you have to prove you've still got it. And yeah, if you sell it, you have to report it through the SMSF. Our job, as much as we don't like the government, Mary Jane and I and our firm's job is to keep the SMSF legal so that you don't get penalties. The penalty can actually be 45% of your super. And we don't want anyone being slugged with that. So no, in an SMSF, it's all got to be done 100% legitimately.
Okay, and just another question I had is, when you were talking about capital gains, like if I wanted to, I don't, but if I wanted to buy a house or a property with my super, right, and I've got a lot of that in bullion at the moment, if I was to buy a house, would the process be I sell the bullion, pay the capital gains, and then make the purchase on the house? Is that the way I guess?
No, not exactly, because you'll sell the bullion and then whatever financial year you've sold it in, that will be accounted for and the tax will be paid at a much later stage. It may even be 18 months later by the time the tax return's done and the bill is due.
Yeah.
So you sell the bullion, you buy the house, you pay the tax bill a lot later. So what you just want to do is we could give you a rough idea of what that tax will be. so that you can make sure you save some in the SMSF for later when the tax bill comes in.
So is that process, let's say I found someone that was willing to just do a swap, my bullion for their house. Is that counted as something that's a capital gains? Is capital gains on that?
Yeah, absolutely. It's still seen just as a normal sale.
Okay.
Yeah.
Okay.
And the SMSF, the requirements are everything needs to be done at market value.
Yeah.
So you would have to, even if you did a slightly different deal with the person, for SMSF purposes, they would look at the market value, which, as you know, is all on the internet at that day of their transaction, and that's what they would deem the sales price would be.
Is that the same with crypto? Because I thought, like, for example, if you held Bitcoin and then you just spent your Bitcoin, you weren't actually up for capital gains because you weren't.
No, you definitely are. And Bitcoin and all of the crypto exchanges now are firmly on the ATO radar. If you sell crypto, it's on your tax report to say you've sold it.
What if you buy something with it? That's
Doesn't matter. The sale triggers a report to the tax department.
Yeah. Yeah. Okay. All right. No, thank you. That's fine.
Bree, sorry, I put your hand down earlier because I thought you'd finished asking your question, but you have another one.
Yeah, no, I did do that. That's all right. Thank you. Thank you. I'm just wondering about your opinion on a reverse mortgage. We've got quite a bit of equity in our house, and we were thinking that so we're not stuck somewhere, to be able to get a reverse mortgage, to have that to be able to purchase something else, so that we're not left homeless when we sell where we are.
Yeah,
and then pay it back, obviously, when that happens. What are your thoughts on that?
So reverse mortgages have their place. They're not the greatest product because the interest rates are incredibly high and it's capitalized interest. So basically the loan escalates really, really quickly and eats into your equity. If you have no other choice, yes, it's a viable product. Depending on your situation, you might just be able to take out a normal mortgage to buy somewhere else and not do.
Well, no, because there's employment issues, and the other party is 73.
Yeah.
So so it's also a way to be able to protect what we've got from other things. But
so from what I understand is you may want to buy another house but keep the one you're in for a period of time. Is that?
No, we just don't want to be. So in a normal situation, we'd be putting the house we're in on the market, selling it, but then because of all the homeless shortage at the moment, housing shortage, we don't want to be left with nowhere to go once this is sold, and we need to vacate for the new owners without purchasing something. So just to try and avoid that situation, we're sort of trying to come up with ideas rather than just like, go and get another mortgage, because that's not going to happen. But we've got a lot. We've got nearly 95% equity in where we are. Yeah.
So no, as I said, reverse mortgages have their time and place, and it sounds like that would be a viable option for you. So if you just Google them, you'll find mortgage brokers that specialise in them, and get them to come out and see you, and they'll get one sorted for you. Just have a good look at the interest rates and things like that.
Okay, great. The other question, sorry if I can, is I've got $40-something thousand in my super. I'm not even 50. I've been on disability for since 2010, and they won't let me have it.
Actually, just before we go on to that next, I forgot that Jason is on here. Jason is our recommended mortgage broker. I'm not sure if he does reverse mortgages, but Jason, if you want to pop your email into the chat, Bree can touch base with you. As I said, look at other options before you go down the reverse mortgage, and Jason might be able to help you with that.
Great, thank you.
Sorry, back to your next question. Sorry that you
the other one. I'm on a disability pension, have been since 2010. I've found some super in REI Super that I was with, which was at the ATO, but now it's not. And I've tried to access it under the disability because I won't be returning to work, and they won't allow me to get it.
Yeah, we don't specialise in that. There certainly are firms. I don't know if Mary Jane, if she's listening. Do you remember the name of that firm that helps people get their super out?
No, I don't actually. I don't know. Haven't come across that
I've
one.
got to follow up on that because we want to make them a strategic partner of ours for this sort of situation. So I might, Bree, I can track down that person and get in touch with you. If you could just pop your email into the chat box.
Yep, I've done that already.
Yeah.
Thank you. Thanks heaps, guys.
No worries.
Right. It looked sorry, someone's just coming in, but it looks like no one else has got their hand up. If anyone has a question, Eliza. Yes, back to you, Eliza. Hello.
Sorry, here I
She's
am.
on mute.
Just quickly, with self-managed super fund, when you're 60, can you only take out 10% of the fund? You have to show that you're not working a certain amount, or
Yeah, so the rule to get it all or a large amount, more than 10%, is turning 60 and have left a job. So you don't have to be permanently retired, but you have to turn 60 and effectively retired by leaving a job. Once you do that, then there's no condition on how much you can withdraw. You can also withdraw all of it, which we wouldn't recommend because we do believe super is the best place for your money. It's the best tax situation and it's the best asset protection. But if you certainly needed some out, you certainly can do that over the age of 60.
do you guys work with PMAs at all? Private Members Associations?
Yes, we had one of our own. It didn't go very well. Yes, we do. We certainly do accounting for PMAs. We have set one up ourselves. They can be done a little bit cheaper, but there's a lot to talk about when it comes to this private members association and the people out there that claim that you don't have to pay any tax on that. I disagree, and the tax office disagrees. If the tax office find you, they will make you pay tax on it, regardless of whether you say it's private or not.
Mm-hmm. Okay.
Yeah.
Thank
That
you.
is something that's worth, if you were going down that path, just a one-on-one session with me where we can really flesh into that detail as to whether it's worth it or not. I've had a lot of people just about to pay a lot of money to people to set up a PMA, $10,000, $20,000, and a $200 session with me, and they've realised that that's an absolute waste of their money.
Okay. Thank you.
Now, I apologise. There was a question very early on from George, who it's a good question. He said, are the purchases of a 1 ounce gold bullion lunar horse coin allowed for an SMSF? Now, I looked it up on Ainsley at the moment. A 1 ounce Year of the Horse Perth Mint coin, which actually has a stamped fiat value of $100, is priced at $6,500 or $6,565.84. Now, it is a little bit more expensive to buy than some of the other coins. But Cass, what's your view? Would it be counted as a collectible or would it be counted as a...
Yeah, that is a good question, because we have some auditors that say they're a collectible, and you can still do it. There's just some more regulations around it. But having said that, I've got 30 year of the something in my SMSF that I've had for years and never had a problem at all with any auditor. Because what I believe the collectibles are is the real, you go and buy, a $2 British coin from 1910. It's a $2 coin and you're paying $5,000. That's a collectible. Paying just a little bit extra because it's got a pretty horse on it, I don't think that's a collectible. But just be aware that you may have an argument with the auditor. I wouldn't go and put too much into something like that, in case the worst could happen. If the auditor disagreed, we'd find a different auditor that agreed. That really didn't work. You might have to sell that asset and buy a different coin.
Yeah, and if you haven't already got this book, Gold and Silver in Your SMSF, Ownership Must Knows, I'll put the link and well, it's on our website, but I'll put the code for 100% discount in it. It does talk about that. When is a coin or a collectible? The rule of thumb is basically in the valuation each year, it just has to be valued at the minted value, not at a premium. So Ainsley says for all their coins that they unless it's a very, very rare one, they'll just buy back these ones like the gold, the horse that are sold at a higher price, just at the base 1 ounce spot price. So and you can always find a dealer that's only willing to buy it back for that spot price. But as Cass said, if it is a very clear collectible, then that's where you get into some trouble. But now there was another question in the chat that I will go to, and then we'll go back to the hands up. So Pete has said that you're just about to start your first tax return for the SMSF with Peter, our PETA. Peter, can you send all the documentation digitally, or do you need the hard copies? It's basically whatever Peter or her team have asked you for. My understanding is electronic copies are fine. Cass, have you had any experience where people have needed to send in originals?
No, electronic's fine. And I don't know if Peter's got that system up and running yet where they can just upload it all to the portal, Mary Jane?
We're rolling it out slowly. We're very excited about our new app that's we are rolling it out. I think we've probably got 20 to 50 clients on it already. It's a great secure facility where you'll be able to download it and upload all your documents into that and be prompted if we need anything else, and you can ask your questions in that. So it streamlines a whole lot of emails going around, and sometimes emails, as you know, get buried and missed, and we're very sorry if that happens. So we're very excited. It will be rolled out in full over the next 12 months. So going back to the hands up, Annabelle, sorry, is that because I've got so many people here? I can't see what your name is. Oh, Angela Stanley. Angela, how are you going? I think it's your turn.
Hello. Well, thank you. I've just got a super basic. I wish I'd heard everything because I just came in at the end of that Bitcoin conversation. So I was very interested in that. I'd love to hear the whole thing with the golds just going through the roof, which is amazing. Because I did buy some gold when I first had my self-managed super
Oops, Angela's frozen
with you guys, which was cool. I've got some really basic questions.
Problems?
Oh, have I frozen? Oh, can you hear me now?
You're breaking up a lot, so
No.
it might be
Okay.
better if you put it in the chat or just talk slowly. No, Angela,
Chat.
you
Put it in the
Put in the chat.
Yeah. And on that note, I think I'm the barometer for buying gold at the wrong time. Like, it went up massively. I look at kilos. It went up to $210,000 a kilo just when we were in Fiji. And I'd been keeping money aside to pay tax for my SMSF. And it's like, and anyway, so it's another month or two. So I went and bought it. And now it dropped down to 200,000. I know it'll go up again. But so if you're ever going to buy anything, don't buy it when I buy it, because I think anyway.
Let us know when you're going to buy it.
Not again soon, because I just don't have any left now. But anyway, so Angela, put your question in the chat. I'm really sorry about that. Sally, your turn.
Yes, Lady Cass. Just a quick question about Mum's super. I've been trying to get her remaining super, which is about 80 out. But unfortunately, the super fund has been giving me all sorts of delays and jumping through hoops in as far as registering the EPOA. I've got the enduring power of attorney registered now, but they've given me a lot of grief over it. So I get the impression that they're very wary about me taking any kind of control of Mum's funds. Have you got any suggestions or tactics that you recommend as far as approaching how I withdraw it? Like, do I approach them and say, you know, I want X amount out because we want to purchase a car or some sort of whatever? Because I'm looking for Mum's 83.
Okay. And she doesn't need, what are you going to use the money for?
Well, I was going to put it into bullion for her. I don't really care what Centrelink has to say about it, because I probably will be losing that eventually anyway. But I'll have to let them know if I do that. But it's getting it out of there in the first place that's the concern.
Yeah, they don't ask them what you're going to spend the money on any of those application forms. So our only advice, and Mary Jane might add, because she's had so much experience with hustling super funds, is just to be very, very persistent. Ring them every second day, email them every second day. Just don't give up, because I think they do everything they can to delay. And if you're not hassling them, they'll just put you down the bottom of the pile.
And as much as you'd like to jump up and down and scream and shout at them, just head down, be nice. You know, honey always gets things rather than a big stick, because they will just say, oh, no, and hang up on you, and then they'll put a black mark against your name if you're not being cooperative. So just, you know, tell them whatever they want to hear. That will, you know, just say, oh, no. I mean, I don't know what they want to hear. What are they saying?
Yeah.
Sometimes, to be frank, some of them actually that don't pick up the phone don't know what you're talking about, and they get things wrong. So it's good to be very clear on what you know is correct. And in fact, the law says that 3 to 5 days, at least for a rollover into an SMSF, in the law, they're supposed to do it in 3 to 5 days. They don't. But if you've got something like that you can say, well, oh, this is a bit strange, it's taking long because the law says blah, blah, blah.
I thought maybe if I approach it by taking out a certain amount first, they might just see it as me taking a bit out and then take the second lot out rather than try and take it all out in one hit. They might put a whole lot of delays and difficulties on that. So anyway.
If you go into the ATO portal and your mum's ATO portal, if you can get into your mum's ATO portal, and if you're the registered EPOA with the ATO, you may be able to, then there is a super menu. You can click super. Oh, but that's transfer. That's transfer.
That's okay.
Yeah.
Okay. All right, I'll just persevere. Thanks, ladies.
Okay, so Bree, you're up next. Actually, Bree, before you go, I'll just ask the next one in the chat.
Yeah, no worries.
Question is from Deb. Do you assist with navigating the super TPD from an industry fund process in relation to tax minimisation or advice?
Yeah, so we can't help with the super TPD side of it, but we certainly can help with your own taxation circumstances to see if there's anything you can do to minimise. There are some strategies like making sure you're on a low income bracket that year, potentially doing a large superannuation contribution if you're able. So there are some ways that you can reduce that tax. So that would be best, like a one-on-one chat with me to see if there's anything we can do. And as I say, with anybody, whenever you're planning to reduce, trying to legally tax minimise, get the advice before the event happens. Because sometimes after the event, people come to me and go, oh, I've just made this $500,000 capital gain. What can I do about it? And it's 6 months later and the financial year's closed. It's like, well, nothing. Here's your bill. So get some advice before you trigger any large capital gains, or in this case, a superannuation payout. So have an appointment, we can have a quick chat.
You want to answer Angela's question first?
Yep, very basic one. Gone to self-employed more recently, yeah. Coming up to 31st of October. Have you still got time to add? Yeah, it's 31st of October isn't really the key deadline. It's every financial year. So, you've got to 30th of June next year for this financial year. So absolutely make contributions whenever you can. And it is as simple as transferring the money from your account to your super fund. And then we deal with it when the accounting time comes. We'll ask you what that contribution is for. And for some people who are, if you're salary and waged, your super guarantee just goes straight to the bank account. There's nothing you can do. But for self-employed or people running their own companies, sometimes it's a question of, well, should we claim that as a tax deduction or not? Because if you claim it as a tax deduction, the super fund pays 15% tax. So if you're on a really low tax bracket, you shouldn't claim the tax deduction. You still put it in your super and it'll be zero tax. But anyway, they're the sort of things that as the accountants, we look at your situation when we're doing the SMSF return and decide whether to treat it as tax deductible or not, which is a very good reason to have us as your personal tax accountants as well, so that we can do that analysis for you. But yeah, and answer your very simple question, very basic answer is, Angela, yep, just deposit the money to the bank account.
Yeah, all right.
Just further on that, if you're a company, PTY Ltd company, and you're the director, the only shareholder of the company, and the only employee, and the company is getting income from another contractor, but the employee is doing the actual work and drawing a wage, there's really no overheads. How can we reduce the tax on that when there's really nothing, not much to offset?
Yeah, very difficult. Superannuation contributions are the easiest way, because you can contribute up to $30,000 a year after tax deduction. Okay. Yeah, so that the tax office, I've as people are probably aware, I was with the tax department as an auditor for 11 years. And then I've been a tax accountant ever since. The tax department have systematically cut down on every single tax loop there's ever been. So all they've really left is superannuation deductions, buying a negatively geared property, which I'm not necessarily think is the best idea for anyone at the moment anyway, and buying vehicles and leasing them, but that's costly in itself. Yeah, there's not much you can do other than maximise as much as you can, claiming your car expenses if you can, some home office expenses. But yeah, it's crack
Yeah,
down
we're doing all
everything.
that already. So super is the best one.
Yeah.
Yeah.
Super is
to-
the best one, and that's why SMSF is so great, because some people think, well, I don't want to put 30,000 into super, into this industry fund that I may never see again. But when it's your own super fund, all you're doing is taking money out of one hand and putting it into your other hand, with a time delay as to when you can use it, but you're looking after it yourself and you know it's safe. So yes, maximise your super contributions.
Is drawing wages like that each week the best way to go about it, or should you just be taking like director's drawings once a quarter, or can you reduce your PAYG at all by doing that?
That really depends. Ultimately, you can't know, because they'll hit you at the end anyway. If you just draw director's duties, they'll end up putting you on pay-as-you-go
Okay.
installments.
Yeah.
Some people just find the budgeting of taking the weekly wage is the easiest way to run that sort of thing.
Yep. Okay, no worries. Thank you so much.
No worries. Someone's asked, not a good time to buy negatively geared properties. Can I elaborate? Sure. So I was always, probably my number one speciality over the last 20 years in my accounting firm was investment properties. I helped a lot of people buy investment properties. They made a lot of money. But after COVID, I pulled out of the investment property market. I said to my company, I said, I'm not doing any more sales. And I personally actually sold my entire property portfolio. And the reason I did this, and I could be wrong, I don't think I'm wrong about gold and silver. I could be wrong about property, but I think property is going to crash as well. It could be wrong because of immigration, everything else going on. But overwhelmingly, I think property is going to crash because it's just simply unaffordable. The next generation has absolutely no hope in buying a property, and that is not sustainable. And I believe, I'm very open about this, I say it every time anyone asks, that I believe the share market is for a 50 to 80% crash. And there's experts all around the world saying that right now. And when the share market crashes like that, and they're saying it's going to be bigger and longer than the Great Depression. So when that happens, the property prices are just not sustainable, because no one will be able to afford property. People will be selling off their investment properties and their rent holiday homes like you wouldn't believe. We are also at the end of what we call the 18-year property cycle, which once again indicates a crash. So I believe it's going to crash. So like me personally, I'm not buying property. I'm telling my kids who are wanting to buy properties, please don't. Just wait 2 or 3 years and then we'll know which way things are going. But as I said, I could be wrong. I believe having your own house. So, have your own house, because we all want a place to live in. We don't want to be stuck on the rental cycle. But as for properties, no. Andre has said, if you move overseas, can you take your bullion in your SMSF with you? Look, we haven't had that question before. There would be nothing to say you can't. You just still have to have your photo of it every year for the auditor. Depending which country you go to, they have their little immigration checklists where you have to declare how much you're bringing in. So that would be more a question for the country you're traveling to as to what their entry requirement rules are. Because the last thing you'd want, I had a client ask me about going to New Zealand, and I did all the research I could, and in the end she went to New Zealand, no problem, took all the bullion with her. But you'd really just want to research the country you're going to, because the last thing you want is, confiscated at the border or something like that. If there's any more questions, let us know. Otherwise, I might do a quick presentation if you like. Given we've got 10 minutes, so I will do this, and we are running this later on tonight. What time is it, Mary Jane? 6:30.
Yeah, daylight savings time Eastern, so Canberra time, Sydney time, 6:30, which is what, 5:30 Queensland time?
5:30 Queensland time, and this daylight saving does my head in.
And if you're in somewhere else, I'm sorry, you do your own calculation.
Yeah, and so I'll be going into more detail with a more advanced presentation tonight on this. I'll finish the slides, but just let me run this through as a demo for you guys anyway, so that you may or may not hop back on later on tonight. So Mary Jane and I were in Fiji, and we were learning very exciting things. Does that come up okay, Mary Jane? Yep. So I've been very vocal in the freedom movement for the last few years. There've been a lot of people out there proposing that people transfer their family home into a trust to protect it from everything that's coming in the world. And I've been very, very vocal about saying, no way, that is a really stupid thing to do. And these people are criminals for telling you that. They were also charging $20,000 to set up this trust. And I'm going to show you the reasons why I was saying don't do that. So I was very, very excited in Fiji. We were studying under one of what I would say Australia's leading asset protection lawyer, Grant Abbott, and learning all strategies that he has spent his whole legal accounting career designing fantastic strategies. And this one really, really came home to me. So I'm going to run through it. What we talk about in asset protection is putting a moat around you. We call it a moat and castle. So you want all your assets protected in a structure surrounded by an impenetrable protection like a moat. So what we're going to look at in some of these solutions is that what happens in the event of a legal suit on your death or incapacity, also marriage breakdowns, all sorts of things. What happens is everyone comes after your assets. And anyone that's been in that scenario knows, and I'll be adding to this presentation for tonight some terrible, terrible case studies of some things that have happened to people that have been caught out. Australia produces the most amount of lawyers per capita in the world. It used to be America, now it's us. And litigation is becoming consuming. Those lawyers, the ambulance chasers they used to be, are now chasing estates and marriages and death and anything, anywhere anyone's got any assets and they're not protected. They do a no-win, no-fee lawyers, where they'll take on the case for, say, a beneficiary. They will hunt for beneficiaries. If someone dies, they will chat GPT, Google search and find beneficiaries to come and attack you on a no-win, no-fee basis. Absolutely criminal. And that's because people have the mistake of having assets in your own name. The problem with assets in your own name, Australian taxation laws are designed to encourage you to hold assets in your own name. With the capital gains tax exemption and also the land tax exemption, negative gearing benefits, they really encourage assets in your own name. But it's really not a good thing because in your own name, you'll have the lawsuits coming at you. Even putting assets in your spouse's name is problematic because I'm sure everybody here would either have been through it themselves or know someone who's been through it, where as the ex-partner comes after all your assets and successfully gets quite a large proportion. So any will or testamentary trust can be overturned with some new laws that have been brought out called the Family Provisions Claim. So if there's people out there that feel that they've been left out of your will, they can come after you. The bloodline is a problem. So we want to see assets protected in a bloodline. So, if you feel like putting your hands up, I'd like to ask who here wants all their assets to stay in their own family? A reverse way of asking the question is who here doesn't want the government to take your assets? We all want our assets protected with our family. So if you pass monies, even if you try and give them to your children, they can be stored back under the Family Law Act. And most people are not aware that a 2-year de facto relationship means assets are caught up as matrimonial property. We even heard a shocking scenario in Fiji where you don't even have to live together to be classified as a 2-year de facto. So it says 5 minutes left in the meeting, but I will go a little bit longer for those that want to hang around. So on death, if the asset goes to a child, we want it to be with a strong bloodline tie to the person who's died. Otherwise, the asset can go to the spouse and their children and stepchildren, and family wealth can just be dissipated to people that you don't want it to go to. So on a scale of 1 to 10, how important it is that your family wealth goes in your bloodline. Look, some people don't care. We have some clients that just go, I don't care about my kids. They can make their own money. I don't care where it goes. Don't even care if the tax department takes it. That's not many people. Probably 99% of the people I deal with probably put on a scale of 1 to 10, probably 9 out of 10, if not 10 out of 10, that they want it in their own bloodline. So, and this is where we got really excited, well, excited as accountants get. We were there when the Division 296 announcement was made. For those that don't know what that is, that's where the government were planning to tax unrealised gains in super funds with people with an account balance of more than 3 million. They came out and they announced that, no, we're not going to do that. We're still going to tax people that have got more than 3 million, but we're not going to tax unrealised gains. And they sort of made it as a big, oh yeah, look how good we are that we're not going to do that. But over in Fiji, we had 50 very high-level accountants in the room, along with Grant Abbott, #1 specialist in Australia, and we all just looked at each other and went, yeah, no, this stinks. This stinks, because what are they not saying? So they're calling it a 30% and a 40% tax. Even that is misleading, because it's not really 30 and 40%. Super's already taxed at 15%. So they've just really added 15% or 25%. But the way they keep talking about a 30% and a 40% tax, we thought was a clever way to get Australians used to those numbers. 30%, 40%, 30%, 40%. Why? Because we believe that there's a launch coming for wealth and death taxes, just like the UK, which has a 30 and a 40% tax rate. So to us, because what they were also saying in their announcement is that the Division 296 was going to bring in a certain number of billions of dollars. Well, you know, we're not going to get that in anymore. We're only going to get a few little billion. So they're like going, oh, now there's a big gap in our budget because all the money we thought we were going to get, we're not going to get. To me, sounds like they're already setting it up to bring in another tax. They're already having discussions, panels getting together to discuss death taxes and wealth taxes in Australia. So we're not far out. And then what we believe would happen is that at exact the same time that they introduce the wealth and death taxes, they'll bring in a gift tax. Because how they can announce new taxes is they can just come out one night in a budget or in just an announcement, and potentially after we go through a massive financial crash, which we think is coming, they'll go, oh my God, the economy's in such a terrible state, we need a new tax. So as of midnight tonight, bang. But then if they just did the death and wealth taxes as at midnight tonight, then everyone would just gift their money to other people, their kids and their bloodline and other people. So what they'll do is bring in a gift tax at exactly the same time so that you can't gift your wealth away without getting caught. They'll wait for a financial crisis, as I said, and then they'll say, you know, we need a fair solution, and it'll be effective immediately. So don't wait for Canberra, the GovCo, to decide what you're allowed to keep. Now is the time to lock in the structures, review your super, and protect your wealth. So this is where, as I said, I got excited as an accountant. For those that have been following me for a while, I sort of stepped down for the last year or two. I had a lot of personal issues going on with some personal problems with some people. Won't go into detail there, but I was sort of semi-retired and I was just sort of dabbling a little bit, helping a few people out. But now I've decided to come back and really get stuck into this, because I think we have a really limited amount of time to get our structures into place. And what Grant Abbott has got is an amazing structure. Once they do that announcement, it's going to be too late. So we're willing to, just like we did with the SMSFs, helping clients get in, we're willing to run hard and fast on this and get as many people protected as possible. So what is the solution? It's called a protector trust. So it's designed to protect your personal net wealth in a family protection trust. It's set up to only have your bloodline as beneficiaries. And you can give spouses if you choose to, but at the end of the day, if anybody challenged it, it's bloodline only, including their trusts and companies. So we establish a family protection trust, and then you gift your net wealth, all of your net wealth, excluding the SMSF, into this trust with a very complicated deed and gift back. There's no capital gains or stamp duty. The amount gifted into the capital is the capital of the family protection trust, and it's lent back with minimal rates payable at the end of the loan. This probably sounds too complicated, which is why I'm just going through it generally. What we do is have a specific strategy for everyone who wants to talk to us about it. The loan is secured by registering a mortgage over property. All right, so just a little bit of a picture of it. You basically gift all of your net assets. you don't have to go right down to your watches and things like that unless they're worth significant money, but your home, your jewelry, your cars, your gold, your shares, everything gets gifted into this trust. The trust loans the money back to you. So in effect, there's no change in your own hands. This is just a whole lot of paperwork that protects you. But what it's done is it's moved all your equity over into this trust before these taxes, the gift tax and the wealth taxes, come into play. It can be set up with succession of FPAs, that's the family appointor, to make that easier to understand. For example, in my family, I'm the family appointor, and then I have my children in succession. So when I pass away, it goes down the line to the family so they can look after it. The result is there's no capital gains or stamp duty. If you get sued, your net wealth is now in a trust. You need to be careful who acts as trustee and appointor, and we'll talk to you about that. You really want to keep it in your own control. And it can afford family law protection. It won't. Someone came to me yesterday, they're just going through a divorce. Can this help them? No, it's too late once you're in that situation. But if you get all your assets into this family protection trust and then enter a new relationship, then it can definitely help you there. And for estate planning, it sits outside the estate. So any of the lawsuits from your beneficiaries, they won't work. People come after you, and it will avoid those wealth and gift taxes. So I think it's easier to go with an example. This is just a really common example. Sally and John, they've got a principal place of residence worth $1.5 million with a mortgage. Let's say in 10 years' time, it's worth $3 million, and they're both earning $100,000 in wages. This is your average couple. This is your average people that we talk to every day. And this is why I was so against the people in the freedom movement suggesting people transfer their own home to a trust. If you did this, transferred it to a normal trust, including the private trust that people were setting up, there'll be stamp duty of $93,000. I think that's a little bit high. I'm going to double check that. You also will be subject to land tax every year after, so $68,000 in 10 years. You'll also, and this is the biggest one for me, you lose your capital gains tax exemption. So later on, when that couple sell the home, they're going to pay $337,000 in tax. So the total 10-year cost for transferring that to a trust is basically $500,000, which is why I was so against people doing this. And you possibly have death duty exposure at a later date, because that is not a protected trust. Let's compare the protected trust that we are able to do for you. No stamp duty, no land tax, full capital gains tax exemption, no death duty exposure, total saving of close to $1.4 million. That's just one couple, one property. So some couples we deal with have 5 properties. This strategy can be put into place for every property you've got, as well as all of your other assets. So yes, as an accountant, I got quite excited about all of that. That's just the tax savings. This protected trust that Grant has been doing has been around for quite a long time. He was doing it more for these advantages, not the tax advantages. When you put the tax advantages in, it blows it out of the water. Other advantages are that the assets remain outside the estate. So it is what is known as a living trust. You put all your assets into a trust whilst you're alive. And I personally have done this many, 20 years ago, so that I don't have any assets, and I never will, because nobody can come after me, nobody can sue me, nobody can touch me. When I die, nothing changes. They just bury me in the ground. The trust still continues to exist. So there's no death taxes, there's no expensive probate, there's no lawyers, there's no challenges. Life just goes on, except for me, because I'm dead. Okay, seamless succession, that just means you can hand it on to your kids, and then when they get old, they can hand it on to their kids, and it can stay in the families for generations to come. Grant often uses the term, the Royal English, the monarch, how they've got everything of theirs locked into trusts, and it just flows down generation after generation. Enhanced asset protection and family control. So there you go. That's a real rough demonstration about what we're talking about. What we do offer is I'll stop sharing that. What we offer is a one-on-one appointment with me to discuss whether that would be suitable for you, and I would put together a quick presentation to show you how it would work for you. And we believe we're going to be incredibly busy real soon. And so if you want to book in, jump onto my calendar and book me in. As I said, I'm back working only 3 days a week, but still, I will do everything I can to get as many people into these structures whilst I can. So it is 12:30. If anyone had any burning questions, we might take a couple. I think Mary Jane's probably hopped off. She's probably got another meeting. And then you've got a few extra questions. I can take them. Otherwise, as I said, we will be running this again tonight. The link would be on our website, and the recording will be available as well. So I don't see anyone's hand up, so there's no questions. Actually, Mary Jane's posted the link to it tonight. We're going to try Facebook Living for the first time, but you can either watch it on Facebook Live, but probably jump back into the Teams meeting because we know this one will work. I don't know if Facebook Live will work. We've never done it before. So anyway, thanks for that, everybody, and really exciting times ahead, and excited to be here and able to help people. So let's jump into protecting your assets. I'll log off now. See ya, everybody. Bye.
Thanks, Kaz.